Hello and welcome to the Bulletin with UBS on Monocle Radio. Each week, the sharpest minds and freshest thinkers in finance take you beyond the numbers and hype, right to the heart of the big issues of the day. This week on the show, we're establishing the why and exploring the how of gender lens investing. We welcome back Amantia Muhedini, the head of Sustainable and Impact Investing Americas in the CIO Global Investment Management Group of UBS Global Wealth Management. Amantia is going to guide us through a new report that aims to help investors understand where to focus their efforts in this space. To do this, Amantia and her team built on the gender lens investing framework that we discussed around a year ago on this show by mapping the investable universe and by proposing a theory of change approach to really look to address and close the gender wealth gap. It's a pleasure to welcome Amantia Muhedini back to the show. Amantia, lovely to chat to you. Great to catch up. And this is a really important and compelling piece of research that is in our lens today. Let's set the scene a little bit. Remind us why you and your colleagues have dived into this area. We've discussed gender lens investing before on this programme, of course, but actually interrogating the how, the why here remains critically important, doesn't it? Tell us a bit about the background.
Yeah, that's right, Tom. And the conversation around gender lens investing now has been going on for over a decade in this formal setup. In the course of this research for this report, actually, I noted that the 30% Club, which aims to increase female representation to 30% of boards, was established in 2010. So that was the same year that the UN Women Organization was also established. And so really the question is what's happening now in 2026 as we've seen all of these movements forward and maybe a few steps back around it. But our goal with the report was not to once again note why it is important and helpful from an investment perspective to think about gender as a factor and as an area of intentionality. Really, what we wanted to do here is really explore how gender investing is practiced and also help take a step back and put forward a theory of change for those asset owners or investors that want to actually do this holistically. We speak with many clients here at UBS who say, I really care about this. I get it. This matters to me personally as an investor. But what are the investment opportunities or what will this mean for my returns? So that was the objective for this report.
And I think that's really important. And we'll talk a bit about some of those approaches, of course, and how you've set out to sort of map this whole universe of possibility and that theory of change in a second. Just to double back, obviously, you mentioned the 30% Club. There are some pretty kind of arresting, alarming, disappointing stats out there. One we've spoken about before in this program is about VC funding, the proportion that goes to companies founded by women, incredibly low. I think it's even more shockingly low perhaps than people might fear it is. And it is important, isn't it, Amantia, to just put some of those stats up there at the beginning so we can understand why people are so motivated to address this area with great haste.
Yeah, of course. I skipped past it because we talk about it so much. But of course, I will admit I was surprised looking at PitchBook data that in 2025, the percentage had come down, actually. It was only 1.3% of venture funding that went to companies in the US and Europe that were founded by women. Now, to be clear, this is companies that have a founder team that is only women. The number is closer to 20 or 25% for those gender mixed companies. But still, it is flabbergasting to look at that very, very low single digit level. And that is what gets people to the table. Now, we also looked at some other stats, right? In public markets, for example, we saw that women now hold and have for a couple of years 1/3 of board positions. In the US, a little over that on average, 34% for countries in the EU, around 20% in Asia. So that's more meaningful. And I think we want to keep both of these things in mind as we think about venture funding in private, as well as who are the people that are helping lead and guide and govern the world's largest listed companies around the globe and the progress there. I don't think we should forget to celebrate that progress.
Yeah, absolutely. Well, in the spirit of being proactive and future forward, let's look then a little bit about how you have been building on this sort of gender lens investment framework, which I think was the feature of a report which we discussed probably around this time, even last year. How is this report sort of moving that framework on or adding layers to the framework? I don't know how you'd characterize it, but what does that look like?
Yeah, of course. So the report last year from the UBS Chief Investment Office introduced a framework. Let me just repeat it briefly here. So essentially, that framework articulates three ways of thinking about gender-lens investment. Investment in women, so that means investing in women-led businesses in some ways, this venture conversation we just had. Investment for women, so that includes investing in those companies and businesses that are enabling women to build their wealth faster than, I guess, the current trend. And that includes women's education, women's health, women's financial inclusion. And then there's the investment by women. So that is primarily this idea of women as the decision makers, be them wealth owners in the context of the Great Wealth Transition, but also women as investment fund managers. And what does it look like in terms of what they're deciding on? So that was the CIO framework last year. What we did this year with my team is we applied the same framework and started looking at what does it mean in terms of public and private markets investments. So we used Morningstar as well as PitchBook data to look at the universe of investable funds that are either led by women, right, have female PMs, or that are investing in those areas that enable women to close wealth gaps, so that investment for, or that, are looking at those companies where there's female leadership in women, right? The other thing that we did in this report was we looked at a data set from data provider Equileap, which is a specialist in this space, to also understand in public markets, what does it look like? What is the universe of investable companies for those investors that care about public markets? And how does that for, buy, in look like there so that we can get a sense of what is possible?
Well, let's talk a bit about those. And as you said, you make the point, the sort of split between public and private. In the public context, the report kind of recaps the state of gender inclusion across a number of global companies. And it looks then at gender and social lens investment strategies. Maybe you could tell us a bit about what are these strategies? What do the mechanics of this actually really look like in practice, Amantia?
The way that we narrowed down the investable universe here to do this analysis was to look at, in some ways, like two filters, if you will. The first one was very simply, what are those investment strategies that have in the name, in the title, terms such as gender inclusion, women's leadership, and so forth, right? So very clearly from the name, we can discern that that's their objective in public markets. Then, to add some more complexity to it, but also think about the whole set of options, we looked at those strategies that are either have an investment objective focused on identifying companies that are improving in terms of workforce management. And that's important because even if you don't say the word women or gender in the title of the fund, if you're focused on workforce management, human capital management, a lot of the investment metrics there have to do also with women's inclusion in the workforce. And then finally, we looked at those investment strategies that have a focus on advancing social objectives, in particular areas such as advancing access to affordability in housing, for example. A lot of this, I will say, was a US-based investable universe in this last area. And the reason why we included it in our analysis is because it really hits at that investment for women. Of course, it's not only for women, but we know that a lot of the gaps that prevent women from closing the overall gender wealth gap have to do with a lack of access to financial inclusion, to loans so that they can become first-time homeowners and so forth. And so these public market investment strategies, equity and fixed income, can help incrementally address that, even if the target isn't solely women. So those were the types of methodologies that we looked in this area.
Well, yeah, and it's interesting. You mentioned there this both equities, fixed income, and the report obviously goes through in a bit more granular detail. Is it important to look with that granularity, Amantia, and consider training that gender lens, whether it be on equities or fixed income or whatever other asset classes we might be talking about? Is it important to work on a sort of a sector by sector basis like that?
Honestly, I think this is absolutely critical. And I do think that this, in some ways, is perhaps one of those areas that investors may be missing, that they may not be thinking about when they look at that jarring statistic of 1.3% of venture capital going to women-founded companies. Maybe what's important, and that's what we're trying to do in this report, is take a step back here and think about how does this fit in the whole context of one's portfolio, right? We're talking about investments, but also what does the world look like what are the companies that are having an impact in terms of innovation, in terms of service provision, and in terms of sheer employment of the global population that includes women. And I think not asking those questions, not taking a step back, and then not allowing ourselves to go into thinking about all the various asset classes risks us underestimating the opportunities that are available, risks frustration, and it risks not thinking about this area of gender lens investing in the holistic portfolio approach, which is what really matters from a wealth management perspective and to full alignment of incentives.
And then what happens if you interrogate the idea of women-led investment strategies? Again, to you and your colleagues, I don't know, does it confirm what you're suspecting to find? I guess there's always surprises to a degree when you're conducting this kind of research. But what did you find in that women-led investing strategy space?
So that one did confirm what other studies from Morningstar, Citywire, others, and PitchBook had shown. It was encouraging to also see it in our own primary analysis here. So when we looked at those funds, both in public markets as well as in privates, that were led by women, so in other words, either they had at least one identified female PM by Morningstar, or they had a principal, managing director, kind of founding partner type individual who was identified as being female by PitchBook, right? So those are the universes. When we looked at the performance of those strategies vis-a-vis their very specific peer groups in their asset classes, we found that on average, these women-led funds performed similarly to the broad group, the broad category. So certainly no trade-off in terms of performance, but also no additional pickup in performance. And this is encouraging as you can then think about, well, if I want to focus in investing in funds led by women, I should expect on average, of course, averages are what they are. You always look at the specifics, but I can look at that investable universe and then see which of those investment strategies actually fit my asset allocation and investment objectives. And so that was an encouraging finding for us.
Absolutely. Well, look, you mentioned at the top this idea of also driving this sort of theory of change approach for gender lens investing. And I'd like to sort of zoom out a little and interrogate that quickly, Amantia, because well, maybe we should start by going back to that point. And can you explain to us why developing a theory of change? This is kind of the fourth sort of tranche of this report, why that is so important.
Yeah, and look, it was the fourth tranche. It could have been in a different iteration, in some ways, the first tranche. Firstly, maybe I'll step back here. The term theory of change is very well known to philanthropists or those working in the social sector. It may be not as familiar to investors. Really, a theory of change is just a structured framework which allows you to articulate how and why a desired change is going to happen in a particular context. Right? So it's just a framework. It's a way to say, if I take an action, what is the set of expected deriving events or results that I'll see in the real world, and how are those supposed to get to my ultimate impact? Now, the reason why we think this matters to really be focused around it and start with this question when it comes to gender lens investing is, again, because for many of our conversations, we see asset owners, investors come to us saying, we have an interest in supporting women and we want to close the gender wealth gaps. We want to close very specific gaps like education gaps, healthcare gaps, right? Now, if that's the objective, you really need to be specific in thinking what are the kinds of things that my investable capital can do or maybe cannot do, right, to get to that final objective. And I'll give you one specific example as to how this works. If the goal is to say, I want to help close the gap in women participating in the workforce. This was highlighted in last year's CIO report, that there is a consistent gap and a plateau in the number of women that have entered the workforce. This may be for a range of reasons. If that is an investor's thing that they care about and they think this is important to then build wealth for women and close those ultimate gaps, then you may want to ask, well, what are those things which incentivize women from entering and staying in the workforce? And you may want to think about who are the largest employers of, women globally. And in that case, we just, again, sticking with this example, right? We looked at some data just for the US market. And what we found is that really it's very large US companies, which are the largest employers here in the US. I don't think that is surprising to think about, but about half of Americans work in companies which are employing more than 500 employees. Not all of those companies will be publicly listed, but some of them will be. Now, why do I say this? Because if your goal is to impact and help create those incentives that close those gaps, make sure that women are being employed, they're in the right positions, they have the right benefits and so forth, then you may want to think about public market investing as part of your theory of change versus venture-backed companies in the US have collectively employed about 3.8 million people between 1970 and 2020. This is from the NVCA, which is a basically venture-related association in the US. So if you want to think about what is my biggest impact that I can make here, maybe you don't want to focus on closing that venture gap, but you want to focus on the public market gap. So that's why the theory of change really matters, as it helps you ground with data then what is most likely to be effective.
You've kind of answered the question there, but my final thought really, Amantia, was going to be, you've got this ambition to close these gaps across the whole sort of wealth spectrum. You've got, as you said already, developing frameworks, theories, and then there's this necessary focus, I guess, on the sort of client side and on the investor side to think about holistic portfolio balance and performance and so forth. Presumably at that point, and we're just talking about this, the clients will then come to you and say, yes, that's all of those different buckets. How do I put it all together? What's the step for me to then act on this urgency? I've got this interest in looking at this space. What do I do? Does it start with a conversation, Amantia, with you and your colleagues? Or is it a little bit kind of like building the aircraft as it flies?
I think it depends very much on where you are in your wealth journey. Certainly a conversation with an investor's own client or financial advisor, be it at UBS or elsewhere, has to be critical to this. But also, I don't think you're building the aircraft as it flies, but I do think that it is an iterative discussion. I think the first step is to really be precise around what is it that I care about when it comes to this question of closing gender gaps, right? What is my why and what is my North Star or my guiding star that I want to land at? Once you articulate that, then you back into what is most likely to lead to that, okay? Then you go through that circle a second time, and together with an investment professional, you look at what is the universe of investable options which are applicable to me specifically. Our report looked at global strategies, but if you are domiciled in the US or in the UK or in Hong Kong, your investable universe will be very specific to you and your situation. So you have to go through that cycle twice at a minimum to say, here's what I care about, this is my theory as to why this will work. Then you go second time and you say, okay, based on what my theory is on what's important, let's look at the options. And then perhaps there's a final turn at this cycle where you're putting together those options in a way that which meet your financial goals. Because of course, we're here talking about investment strategies which are targeting market rate returns. And so even if it may be the thing that you're most passionate about is to invest in individual companies directly backing them, you have to ask yourself, does this fit my liquidity needs? Does this meet my risk appetite from an investment perspective, right? And so that third turn at this cycle is how this all finally comes together into an investment strategy.
And that's Amantia Muhedini, bringing us to the end of this edition of the show here on Monocle Radio. Listen again and explore at monocle.com or follow the show wherever you get your podcasts. You can discover more and find out how UBS can help you at ubs.com. And while you're there, search Women's Wealth for more reports, research and insights. This is The Bulletin with UBS on Monocle Radio. I'm Tom Edwards. Thanks for listening.